Have you ever wondered why prominent investor Cathie Wood predicted that, following a specific occurrence, no one will be able to purchase Tesla stock? The majority of investors think Wood's remarks are significant. Continue to watch and listen to learn her meaning. As there will always be supporters and bears in Tesla's stock, so too will there always be disagreement among experts over whether the stock of the industry leader in electric vehicles is priced too highly or too cheaply. Tesla is still thriving and performing well in spite of what seems like never-ending problems. You'll learn today why Cathie Wood predicted that following this incident, nobody would be able to purchase Tesla stock. Still at the top of the game is Tesla, a renewable energy firm and the industry leader in electric automobiles. As per US News, Tesla stock had an almost 700% increase in 2020. When Tesla first went public in 2010, it sold 13.3 million shares for $17 each. Cathie Wood, whose real name is Catherine Duddy Wood, is an American investor, stock picker, and the founder, CEO, and CIO of Ark Invest, a $60 billion corporation that makes investments in cutting-edge technologies including genomics and self-driving cars. She is frequently referred to as the most underappreciated investor since, in addition to being extremely persuasive in her investment arguments, she also has track record to support her remarkably astute assertions. Wood is well known for giving monthly updates on a variety of topics, including inventions, monetary and economic policy, and what's to come in her area of expertise. Ark Investment Management LLC, also known as just Ark Invest, is an actively managed exchange-traded fund ETF manager based in the United States that was formed by Wood. Ark Invest provides investment solutions to investors looking for long-term success in the public markets with a singular focus on disruptive innovation. Under Cathie Wood's leadership, the Ark investment team thinks Tesla will stay at the top of the electric car market, particularly if it becomes the first company in the US to successfully implement autonomous driving. We're starting to think that not only will Tesla dominate the electric vehicle market, but that it might also capture 20 to 25% of the overall auto market in 5 years, the woman stated. By 2026, that is. Ark projected that their 2025 open-source Tesla model would be worth $3,000 per share. Elon Musk, the CEO of Tesla Inc., really acknowledged through his staff that he agreed with Cathie Wood when she indicated that if the company performs well, Tesla stock may be worth $3,000 per share. According to Musk, if the business performs well and the shares are actually priced at $3,000 each, Tesla's valuation will approach $3 trillion, making it the most valuable corporation in the world. With a valuation of more than $730 billion, Tesla is currently regarded as the most valuable car manufacturer in the world. However, due to significant changes such as estimations of capital efficiency, assumptions and inputs related to autonomous ride-hailing, and a one-year advance in the prediction to 2026, Cathie Wood and Ark Invest have now revised their position. Based on their examination of consumers' perceived value of time, Ark Invest has updated their model, which includes new estimates for the overall market for autonomous ride-hailing at each price point, and the likelihood that Tesla will solve for completely autonomous driving. More demand than initially predicted is anticipated for autonomous ride-hailing at higher pricing points. Based on the revised model, Ark has established a price target of $4,600 for Tesla by 2026 and determined that there is a 25% chance that in a negative scenario, the value of Tesla shares in 2026 will be $2,900, and in a bullish situation, it'll be $5,800. If this occurs, only the wealthiest Americans will be able to purchase Tesla shares, making it unaffordable for the majority of Americans. With a decrease from $84,000 to $7,700, Tesla's capital expenditure per extra unit of capacity has improved. Formerly, Ark anticipated that Tesla would invest $6,000 to $8,000 for each additional unit of capacity in 2025. However, as of right now, the company projects that it will only invest $2,000 to $7,000 for each more unit of capacity in 2026. Ark Invest estimates that in 2026, Tesla's potential Robotaxi business line will account for over half of planned EBITDA profits before interest, taxes, depreciation, and amortization, and 60% of expected value. In 2026, they project that electric vehicles will account for 57% of the company's revenue across the simulation set, but at far lower margins than the revenue from Robotaxis. As Ark has grown more confident in Tesla's capacity to accomplish fully autonomous driving, they have revised the way the robotaxi industry fits into the concept. Despite their earlier predictions that Tesla would never be able to introduce autonomous ride-hailing, they have since changed their minds in response to recent encouraging developments from the company and now project that it will come in 2026, 4 years later than Musk had anticipated. Additionally, they predict that in 2024, Tesla will provide autonomous ride-hailing services, but in 9% of their model situations, Tesla fails to bring robotaxis to market in the allotted 5 years. The projected financial outcomes for Tesla are sensitive to the year of launch, if and only if Robotaxi commercializes within the projection window. Are Tesla stocks worth purchasing? In your opinion? Post your ideas in the space provided for comments below. In the event that Tesla launches Robotaxi successfully in 2026, the expected value will be the mean of 1 million simulations. The aforementioned simulations are very sensitive to the year that Tesla eventually introduces Robotaxis. Tesla launches a vertically integrated human-driven ride-hailing service, but does not establish a robotaxi network in the majority of ARCs. Lowest price per share scenarios. In some situations, however, Tesla does not launch either service. Although the business hasn't made a formal commitment to start offering human-driven ride-hailing, Ark has already discussed the tactical and strategic benefits of doing so. Crucially, ride-hailing services operated by humans have the potential to generate a healthy, steady income stream prior to Tesla introducing a fully autonomous service. Ark anticipates that its human-driven ride-hailing cars will eventually shift to the autonomous ride-hailing network in the event that Tesla offers a human-driven ride-hailing service and finds a solution for completely autonomous driving. While working towards complete autonomy, Tesla may still introduce a human-driven ride-hailing car if it is unable to establish a robot taxi service in the allotted 5 years. Conversely, in the numerous price per share possibilities presented by Ark, Tesla introduces a robotaxi network within the next 2 to 3 years. According to Ark Invest, our Tesla model is methodologically cautious even though it is adjusted to our projections for 2026. This was noted in a published article. In 2026, we predict that Tesla stock will behave more like that of an established business than a growing one. So, is it worthwhile to purchase Tesla stock right now? Before choosing a choice, it is advised to think about these inquiries and the responses that go along with them. Will rising petrol prices lead to more demand than inflation? The price of petrol is a major factor in the higher costs that consumers are bearing. A growing cost of living, especially petrol prices, may make it more difficult for customers to buy new cars. Even while high petrol prices may encourage individuals to switch to electric vehicles, will Tesla's competitive advantage be diminished by competition? While Tesla is, many automakers are quickly emulating Tesla, who is recognized as the industry leader in the production of electric vehicles. Should you be considering purchasing Tesla shares, be advised that the stock's performance is characterized by well-known extreme fluctuations in share price. The following are the few things you should be aware of to ensure that a brokerage account is open for you. Generally speaking, you should look for a brokerage account that offers free trading tools, no account or inactivity fees, and no trading commissions. 2. Examine the foundations of Tesla. Verify that you are aware of what you are entering into. You can thoroughly examine Tesla with the aid of its income statement, competitors' management, and balance sheet.